buenas a todos, traders. Bueno, vamos a ver un vídeo de Waqar Asim. Si no lo conocéis, es un trader que vive en Dubái, que es fundador de la academia WWA, que creo que se desmontaron y, bueno, pues trade ahora por su cuenta. Utiliza el Smart Money de toda la vida, oferta y demanda, liquidez, muy estructural. Si no lo conocéis, os recomiendo ver su canal. La verdad que nosotros lo seguimos desde que empezó con unos 8.000 suscriptores y ya va por 122.000, o sea que es un tío bastante famosete ya en el sector. De hecho, también tiene un podcast donde entrevista a muchos traders, entre ellos a nuestro querido Churrupinsky, que hace tiempo que no reacciono a ningún vídeo, y hoy nos va a explicar cómo funciona la oferta y la demanda y cómo hace $100.000 por mes, una guía paso a paso. Así que si puedo ganar $100.000 al mes, paso a paso, vamos a aprender esta guía. Tengo que decir que el vídeo es un poquito largo, 29 minutos, lo voy a pasar rápido, no os quejéis de que va muy rápido, porque si no se vuelve un vídeo infumable. Lo que sí que va a estar subtitulado al español, así que vamos a ver cómo funciona Waqar. El vídeo tiene 2 días, así que está fresquito, y vamos para allá.
Of any profitable trading system. A lot of traders follow a lot of things. Elliott wave, Wyckoff theory, Fibonacci sequences, support and resistance. I'm not talking about this cocktail of ideas. I'm talking about common denominators that every strategy should hold, no matter if you're a swing trader or scalper. And in this masterclass, I'm going to be
Hostia, qué edición más guapa, tío.
giving you a full step-by-step guide on supply and demand trading, from how to identify trends, multi-time frame trend analysis, the types of points of interest these trends can bring, and then how to navigate supply and demand zones that are real, weak, and traps. And we'll connect everything together by the end of the video, so tomorrow you can walk into the market with more clarity and achieve more profitability with precision. Why should you listen?
Opera lead, ¿no? Me parece lead, liquidity and inducement, ¿no? Creo, ¿no?
To me. Well, I've been trading for almost a decade now. I made millions of dollars from the markets, showcasing my trades with a broker sync journal, showing a my FX book, and the one thing that simply cannot be faked. For 1.5 years now, I've been calling my trades live ahead of time with entry, stop loss, and take profit level. I've documented 59.5% gain in the last 18 months. So join me on this no BS guide where I'll show you the realities of supply and demand and then how to refine them into a working, profitable strategy. I'm going to give you an outline of exactly what we'll cover. First of all, is going to be the market structure connection. From the guide that we already did, a full blueprint on market structure. Obviously, market structure can go hand in hand with points of interest, supply and demand. So we're going to be speaking about the connection, the identification of key components, and that's going to help you really bridge the gap to connect these together and see more clarity on real points of interest and which one have the strength. Because as they always say, the trend is your friend. So you should be trading points of interest, supply and demand with said trend. Next, we're going to speak about the types of supply and demand. So it's not just one type fits all. There's going to be multiple time frames. It's going to be internal. There's going to be external. There's going to be decisionals and extremes and complex pullbacks. So there's a lot of things we'll connect together on this one with the types. Next, we're going to be bringing that together with the structure cycle. There's a rule-based system that I pioneered, which is connecting together market structure, points of interest into a specific cycle and sequence so that you can very easily see which portion of the sequence you are on. Because sometimes when multiple timeframes give a different message, the daily is bullish, the 4 hour is bearish, the M15 is bullish, the 1 minute is bearish. How can you know which trend to read? Well, the structure cycle is going to help you find clarity there. And then of course, with that, with the structure cycle context and the types of POIs, you're going to see what is the difference between a strong point of interest, a weak one, and a false one, what we call traps, and becomes liquidity. Correctly identifying what is a real supply and demand is going to save you so many losses and help you identify what is an A+ setup. And then as I mentioned, the multi-time frame read, connecting together the story of multiple time frames together to then paint a picture of reality of who's in control and which direction you should trade and from where you should trade. And then the last one is obviously connecting it all together so that you can trade profitably, which is the point of this video. This channel has everything that you need if you want to build the foundations of profitable trading, whether it's a single trade case study or it is a full 2-week walkthrough, a 1-hour episode going through as a dancer with price action. But if you want to find true profitability, theory alone is not enough. It's so powerful to have someone that is there for you on one-on-one Zoom calls every single day, live streaming for London and New York, because every day is a little bit different. And if you understand something a little bit wrong, you might not find profitability. Practice is more important than theory. So if you want someone to hold your hand and guide you towards $1 million in funding and life-changing amounts of payouts, click the link in the description to apply for our program. But if that's not something for you, that's also absolutely fine, because the rest of this channel has so much information, case studies and guides, which is why I created this specific playlist for you where you can go through step by step in order everything that you need from this channel over the last 2 years. So click the link in the description to find that playlist. So let's start off with our market structure connection. When it comes to market structure and connecting it to supply and demand, we first need to understand the basic premise of how to read market structure, because that's going to help us understand where are the points of interest of supply and demand inside those structure points. So first of all, the market structure 101 is just simply trends, of course, where you have higher highs.
No pierde el tiempo, ¿eh? No pierde el tiempo, ¿eh? Le ha explicado bastante bien lo que va a enseñar. Bueno, estructura, contexto, ¿no? Liquidez, vamos a verlo. Venga, va. Tendencia.
and higher lows. Higher high, higher low, that goes on to make a higher high, higher low, and higher high. Now, if we move on, when you do read market structure and you can see these trends on a higher time frame, on a lower time frame, you'll see the internal trends where you have internal higher highs and higher lows, internal breaks of structures, and this fractal nature of the market is the reality because therefore you have multiple time frames, multiple trends, multiple points of interest. So how do you navigate all of this? Because someone will say, well, by definition, if a demand area is a higher low, that goes on to make a new higher high, breaking past a previous high in the market. That is a main push, that is a bullish push, and therefore the demand area is the extreme level that originated that move and led to the higher high. That's one definition of demand. So by that definition, we have one demand over here, but same for this small one. From this higher low to this higher high, this area led to a push out, breaking past the previous high. So then you have a demand area over here, and then another one over here, and then another one over here. And then you look back and you said you could be demand all over the place, and there's infinite amounts of demands and infinite amounts of internal supply. So then how can you trade if every 5 or 10 pips you have some sort of demand depending on the time frame? That's obviously not how you trade. Confused traders have multiple lines on the screen. They'll have all the support and resistances, then the Fibonacci's, then the key levels, and then next thing you know, you have 100 lines on your screen, and then because something bounces off one of your lines pip perfect, you think that you found something. That's not how it works. If I'm to throw a line on the chart anywhere randomly, if you look back far enough, something will tap into it perfectly and reverse. Doesn't mean you found anything important. The next portion is understanding what is internal versus external structure, because the white lines you see is external structure, and the small internal structure, the yellow ones, that's internal trends contributing towards the external trend. So let's write that down. Internal trend leads to external trend. So let's define these things. For an external push in the market, external structure, the definition you need to have, typically this is going to be on my preferred time frame is the 4-hour and the 15-minute time frame. These are going to be my main push time frames. So external, I'm going to write main push. So when you know how to find a main push in the markets, that's when you have found external structure, and we'll explain why that's important in a moment. But external is when you have a trend in the market, for example, a bullish trend, and you can see the absolute high in the market and the low that led to that high. This low over here led to this high over here. This is the external point, and it broke past a previous high. That break of structure, BOS, is important, break of structure, to now define our external high and external low. We have now found a main push, but this is when it's with the trend. And then another example is when you have new trend, and that new trend is going to look like you have bullish, like previous, you have the BOS, you have the higher low that made the higher high, you have your external range, external high, external low, and then the market from the high points in the market, instead of coming back down and then continuing that trend as we are expecting, it forms a new trend. And that new trend is, it goes from a higher high to a lower low, and we break structure. We break through this previous external low. The external low is taken out, and therefore that break of structure, new external low, has now led to a break of structure, taking out the previous higher low that made the higher high. We have now made a lower low. So let's get some clarity in this. The previous external range remains, and now we have found a new bottom, and that is our new external low. And that new external low took out the previous external low, and therefore we had a break of structure. So let's define the difference between pro trend and new trend. Pro trend is going to be higher low in a bullish trend that goes on to make a new higher high. So as we had it here, a higher low that goes on to make a new higher high, breaking the previous higher high. That's the old ceiling. Therefore, that new higher high, we have now found a bullish main push. So therefore, this new higher low to higher high is now our main push. And within that main push, the higher low equals external low, and the higher high equals external high. Very simple. Obviously, this is in a bullish sense. In a bearish market, it will be a lower high that went on to make a new lower low, breaking the previous lower low, which is the previous floor in the market. And that break of structure has now found a new main push. And the new main push is from a lower high to a lower low. Therefore, our external high is the lower high, and the external low is the lower low. That is in a bearish sense. Now, when it comes to new trends, let's define it. Okay, I want you to write these things down because it's important. In a new trend, in this case bearish, we have a higher high in a bullish market that goes on to break structure and create a new lower low. So look, a higher high in the market. Why was that a higher high? Because we had higher low that went on to make a higher high, break past the previous higher high. So that is the bullish main push. Now, when we've had that bullish main push, we have now found the new higher high. And then we had a break of structure breaking past the previous higher low to make a new lower low. So that's what I wrote. Breaks through the previous higher low. And it's important to say previous higher low.
La Virgen. Madre mía. No sé si se me escucha bien. Madre mía. ¿Cómo complica algo tan sencillo? Por ponerle nombres, ¿eh? La Virgen. Me está dando hasta sueño ya. Algo tan básico. Coge la típica tendencia. Bueno, a ver dónde acaba todo esto.
Because if it's breaking internal structure, that's not a main push. So we're not breaking past these internal trends, and it's not this little break of structure. It's the previous higher low that made the higher high. That's what we have to break. If you break that, you have now had a new low in the market, new territory, and therefore you have found a bearish new trend main push. The way to remember this is when you are looking for a main push, you're looking for new territory where a previous high or a previous low, a previous ceiling or a previous floor is broken and a new push has happened. And if it happens in the bullish direction, it's a bullish break of structure, a bullish main push, and the opposite in the bearish case. And therefore we have have, just to define it, a higher high in the market equals our external high, and the lower low equals the external low. A little bit different from pro trend to new trend. Just for new clarity, a new bullish trend will be when you have a lower high that made a lower low in the market. That lower low goes on to make a new higher high.
Este patrón lo enseñé yo. Este patrón lo tenéis. Es el que enseñé yo en el último vídeo. Este de aquí. Y no me complico tanto, ¿eh? ¿Dónde está? Aquí. Mis mejores setups. O sea, mi vídeo dura 38 y te enseño 4 setups. Y este tío todavía no ha enseñado todavía ni uno. Lleva 10 minutos. Bueno, vamos a ver cómo acaba la cosa. Pero que sepáis que este patrón lo tenéis aquí explicado en este vídeo. Pues si os apetece en el canal principal. Con un ebook, además, incluido. Bueno, seguimos. Venga, va.
High. So therefore, in a bullish new trend, the external low is a lower low, and the higher high is the external high. Write it down for your own clarity. This is important to define main pushes in the market. Now,
madre mía, 10 minutos para ponerle un nombre distinto a algo que todo el mundo conoce como altos más altos y demás, ¿eh?
why did I show you how to find main pushes? If we now follow our sequence, we've understood trend, we've understood external and internal structure. We have now defined the external structure with main pushes. And now let's move on to defining internal structure. When we have a previous high in the market that fails to make a lower low, makes a higher low, and that higher low goes on to make a higher high in the market. We have found, obviously, a bullish main push continuing the same trend. So therefore, we have now found our external low, and we have now found our external high. Therefore, we have found a main push, which is bullish.
Vale, 10 minutos para cambiarle el nombre, ¿eh? Para explicarte que le ha cambiado el nombre. Porque queda muy bien un external high y un external low. Queda muy bien ponerle nombres a las cosas. Hostia,
because we broke past the previous high in the market, and therefore that break of structure to form a new higher high is the definition of a new bullish main push. Now, as price forms this higher high, the next step we're going to have is a retracement. Now, this retracement, we don't know if this is a retracement to keep on going bullish because it could be continuing this trend. We don't know when the high of the market is made. But when we see price starts to have this bearish push down, when it fails to go on higher, respects the external high and goes on to make an internal lower low. The previous low in the market internally makes an internal lower high and goes on to make an internal lower low. What does internal mean? It means anything inside this external low and external high. Anything inside of that range, inside of that box is going to be internal structure. Doesn't matter if it does this and this and this, wherever it's going. You can say this is bearish, this is bullish, this is bearish, bearish, bullish, whatever you call it. It's inside the range of external high and external low. Therefore, it is all internal structure. So when we see that fails to make a new higher high, respects the external high, and goes on to make a lower low, breaking the previous internal low in the markets, now we are forming bearish internal trend. And you simply define it by the last lower high that makes a new lower low internally. Therefore, we have our internal high, which is now forming a new internal low. And this internal high that forms an internal low is bearish because it's a lower high that makes a lower low in the market. So we have found an internal bearish trend. Now, when the market stays inside of here, it's all internal. And when we break over here and go lower, then we have a new movement because now we can move our previous internal high and we can bring down our new internal low. Therefore, we have a new internal trend. And that's how you navigate internal trends. When you have a new lower high that makes a new lower low, that is a new internal trend, bearish. Therefore, you have the new internal high and internal low. Now, let's say price pushes higher. Now we can see we broke past the previous internal high, and therefore we have now formed a new internal high in the market. Therefore, we have had a break of structure from the internal low to a new internal high. Remember, this is an internal high and this is an internal low, and we've got a new internal high. Even though it is alongside the main trend, which is bullish, this is not a bullish break of structure. This is a bullish internal break of structure because we are still inside the external high and the external low. We have just broken internal ranges, and therefore that's an internal break of structure. Now, this is important because internal trends.
La Virgen. Vaya rollo. Vaya rollo, vaya rollo. Para cambiarle 13 minutos para cambiarle el nombre a algo tan sencillo. 13 minutos para cambiarle el nombre.
Are not as strong as external trends, and therefore internal demands are not as strong as external demands. And it's going to be important later when we connect these together. But I'm giving you definitions for now. So we've understood main pushes of same trend and new trend. We've understood external highs and external lows, and internal highs and internal lows and internal trends. So we're building a lot of things together. And now let's say as we keep going, this internal higher high, this internal bullish new push goes on to form a lower low in the markets. We have now had a internal high that made a new internal low because it didn't interact with the external ranges.
O sea, todo esto para explicarte que la fractalidad del mercado. O sea, lo que pasa en una temporalidad mayor puede pasar en una temporalidad menor. No hay más. O sea, Llevamos 13
And
minutos
therefore, we
para
can say
explicar
this is a
esto.
new internal bearish main push because we had a new internal break of structure compared to the previous lower low that made a higher high. We now have made a new lower low, breaking this structure internally to form a new internal lower low and maintaining this internal high. Perfect. Now, let's connect a few more dots together. So I want to move on to the next point, which is connecting this internal structure to now finding demand and supply. So let's now bring in our points of interest, which are going to be supply and demand. In this case, we're going to find demand first. So within here, the demand is going to be defined as a new bullish main push in the market. A bullish main push in the market from higher low that goes on to make a higher high, breaking past the previous higher high in the market and makes a new higher high in the market. The higher low that created it is going to lead the extreme, and that bottom zone is going to be our extreme demand. So let's zoom in and write this down. And we're simply going to be looking at the block. The demand area is going to be defined as the last bearish candle before the first bullish candle at the extreme that went on to make the higher high. So often it's going to look like we're going to have a bearish candle, and then after that we're going to have another bearish candle, and then after that we might have another bearish candle. So this is just a bearish retracement, okay? And then you might get an indecision candle, and then after that you might get your first bullish candle. And smart tip, if you can take the wick, the last bearish candle high and the first bullish candle low between the next bullish candle, if you can find the story in these wicks, for example, from candle number 1, 2, and 3 from the extreme area, if you can find the candle number 1 wick high, and as long as the candle number 3 wick low leaves a space, they don't overlap. For example, if the candle number 3 wick came all the way down here and the candle number
Un swing low.
1 wick was all the way up here, then when you draw the lines, there is no space, okay? So that is no imbalance. When I see an imbalance, this is a preferred zone. So when candle number 1 wick high and candle number 3 wick low leaves space, that space we call imbalance. That is a perfect place to confirm that candle number 1 is a demand area. So candle number 2 that takes over the range of candle number 1 and leaves an imbalance is the perfect criteria for a quality demand for me. So it's the last bearish candle before the first bullish candle at the extreme that has an imbalance and goes on to make a new higher high. That's when we have found a extreme demand, and it's going to be in this area. Now, when price does this internal
Bueno, de hecho, este dibujito, ahora lo que se dice, este swing low, que en teoría lo ideal es que esta vela barra la anterior, ¿vale? Y si barra la anterior, se neutraliza este mínimo, ¿vale? Porque ya veréis que tarde o temprano acabarán sacando este patrón, que es el que yo explico en el vídeo de los setups. La Virgen, 15 minutos, tío, para explicar altos más altos y bajos y altos más bajos y un swing high y un swing low. Que tenga un imbalance. Ay, la Virgen.
Is the perfect criteria for a quality demand for me. So it's the last bearish candle before the first bullish candle at the extreme that has an imbalance and goes on to make a new higher high. That's when we have found a extreme demand, and it's going to be in this area. Now, when price does this internal lower lows and internal trends, so now we have our internal high and we have our internal low. So when price now comes to this extreme demand, how we defined it, and we have an internal trend break of structure, we now form a new internal higher high because we broke past the previous lower high that made a lower low. We made on an internal higher high. So for example, the external trend could be 4-hour time frame, and the internal trend could be, for example, M5, the 5-minute time frame. So when you have a 5-minute bullish internal break of structure in line with our 4-hour bullish main push trend, if we can connect it with the extreme demand, we have got a quality reaction because we know the internal trend is going to facilitate a new external trend. Remember how we said that earlier? Internal trends lead to external trends, and that's how we're connecting it together. So we will see as we get into the POI zone if we can find an entry on this internal extreme demand. Remember the same thing, the last bearish candle before a bullish candle that leads to an internal higher high. That is our internal demand. Now we can start to trade this internal higher low, internal higher high, trading this internal trend and eventually targeting the external high to form a new higher high in the market. So therefore we see the
Esto lo viene explicando desde el primer día que montaron WWA Trading. O sea, para acabar explicándote la típica estructura que compras en la zona de demanda, 17 minutos. Claro, cuanto más complejo haces una explicación sencilla, cuanto más complejo lo haces, más místico parece y como que parece que lo que te parecía simple no es tan simple. Entonces vas a necesitar pues ayuda de un especialista para ver algo tan sencillo que viene siendo lo de toda la vida. O sea, si acabas este vídeo, llevamos 17 minutos, si acabas este vídeo, previous higher low that went on to make a higher high, had the retracement into demand, internal bullish trend took over, and we now made a higher high external trend. And therefore we have found that we have a new external low and a new external high, and the trend continues. Where internal structure facilitated external structure, we just found the internal trend aligning with the external trend in the external demand and connecting the pieces together. Now for supply, it's going to be exactly the same, obviously just inverted. Now let's go into the second point, which is types of supply and demand. So we bring it all the way to the left over here. The preferred ones I have is the extreme, which I just showed you, and we have the decision
decisional. There's going to be demand to supply, supply to demand, rally-based rally, and some other things. And there's going to be technicalities and rules. But I'm going to be showing you the preferred ones, which is extreme and decisional. Now, if you want more details on all of these things, refer to the previous guide where I make extremely insightful and detailed guide on exactly how to qualify points of interest. But for now, let's talk about decisionals and extremes. So in a bullish trend where we have this external higher high, external higher low, this external low that goes on to make this external high. Now within here, price might not always move in singular pushes. Obviously, we have internal trends as we spoke about. So what we are going to look out for is when we have an external low and we go towards internal structure towards the previous external high. And as we do this, we have a break and a new external high. And this previous external high that had the break of structure to form the new external high, who caused it? This was the extreme. This was the origination point. This is the higher low that went on to make this higher high in the market. But the guy that caused it was this one. This guy over here on the internal range. This is the internal low that made the external higher high. So a decisional that makes the external higher high. So therefore, from an internal perspective, you have internal high, internal higher low, internal higher high, internal higher low, internal higher high, internal higher low. So when this internal higher low goes on to make a new higher high externally, that's when you write internal higher lows that makes an external higher high. So this area right here is our decisional demand. And the extreme point obviously is going to be our external demand extreme. So when you have these two areas where you have the extreme and then you have the decisional, these are my two preferred demand.
Tío, lo que lleva explicándose desde hace décadas, la acción del precio de toda la vida, lleva 20 minutos para hacerlo de la forma más compleja posible. Pero bueno, está bien explicado. Si tú eres nuevo y te pilla de nuevo, está bien explicado. Pero hostia, a estas alturas, volver a hacer vídeos con estructuras tendenciales así, de oferta y demanda, y llamar, y los 10 primeros minutos para complicarlo cambiándole el nombre, y que si el decisional y la fractalidad, Dios mío, pero si es que esto hay décadas y décadas ya explicándose esto.
And in both of these areas is the last bearish candle before.
Oye, voy a tirar para adelante, ¿eh? Esto es infumable.
Structure cycle is very simple. It is main push, internal trend, internal break of structure. Then you have the extreme demand, right? So you're looking for a higher low, higher high. That equals main push. After that main push, when you have this low, lower high, lower low, you have now found an internal trend.
No, ya empieza otra vez.
Extreme demand. So that is the structure cycle. To summarize it, you have a main push in this cycle where the efficiency of the pullback is. That is where our extreme. And now look, when we zoom out, we are connecting so many things together. We're connecting already the first 3 points, a lot of notes. Now let's zoom back into the contents page. What is next? It is strong, weak, and trap points. Demand structure. These points of interest will most likely be traps. The internal supply and demand will usually be weak, and the decision bearish is obviously the opposite. And then you have the weak ones, which is going to be in a bullish market when you have an external high and an external low. And then of course within here you have your decisional over here. The decisional is the higher low that created the higher high, breaking past the previous higher high. Higher high in the market, higher low in the market, new higher high. Weak, because it's not relevant to breaking structure or creating the higher low, especially in the case where you have arrived to a higher time frame supply. Now that you know create a new higher high or you arrive to supply, the internal trends become weak. Okay, remember that. When a new Asia high and then maybe continuing lower. So Asia high zones invalid, Asia low zones invalid. The next one is going to be Frankfurt open structure. So if you refer to my same is going to be using a higher high in the market as a supply zone because it does not equal demand. So these are going to be easy trap points, okay? So you avoid selling here, and in a lower low market, you avoid buying here. You sell in supply, you buy in demand. Higher low that made a higher high. The extreme is going to be a demand. A low
High low, external high, sterling ho, sterling high, high ho, high. Dios mío, qué pesadilla, en serio, tío. Esto va a ser el video.
High that made a lower low. The extreme is going to be a supply, and therefore I'm going to be finding a new higher high. We have now found plus lower time frame. For example, in that area, if I can, how many traders are going to be demand tick? We have arrived after a inducement, which is inducement of this smart money zone, and we have now time window, which is going to be our in my key window, and I trade for reacted off a valid demand.
Bueno, amigos. Bueno, ha explicado algo que lleva décadas, pero décadas, ¿eh? Décadas. Algo tan sencillo como una estructura de mercado, zonas de oferta y demanda, y que una zona débil y una zona fuerte de demanda, y ciclos de mercado, y estructuras. Bueno, no sé, ¿era necesario este vídeo? Para mí no. O sea, ¿era necesario un vídeo de estos? Yo creo que no. Yo creo que esto lleva ya, pero muchísimas décadas. Lo que pasa que, bueno, tiene una edición muy buena, hay que decirlo, tiene una edición muy buena, que sí, el dibujito y tal, y cambiándole nombres, y pues me imagino que esto viene a ser, pues muy bienvenido, ¿no? A ver, para los nuevos, pues creo que está bien, pero vamos, para alguien nuevo yo lo explicaría de una forma quizá más sencilla, pero bueno, creo que está bien explicado. Bueno, pues nada, amigos.
That broke past the previous high, and therefore you have a decisional and
Ahora me acuerdo porque ya no veía más vídeos de Wakara Sim y era precisamente por esto. Porque son cosas que, no sé, que ya están muy como, ¿no? Como muy asimiladas, ¿no? 2 días, tiene 100 comentarios. ¿Vale? Cristalino como el agua. Bueno, la gente agradeciendo. Bueno, me parece un vídeo pues muy básico que francamente pues no era necesario. Creo que la gran mayoría ya lo conocen estos. Hay 50.000 vídeos explicando la típica estructura de tendencia alcista y zona de oferta y demanda y una zona fuerte y una zona débil. De hecho, pues no es por... De hecho, pues sí, lo voy a decir. De hecho, mi vídeo es mucho mejor, pero mucho mejor. O sea, te explica mucho mejor setups de trading que no esto, porque aquí realmente tú no estás aprendiendo a operar nada, te está explicando la estructura de mercado y la oferta y la demanda, pero vamos, de la forma de que lleva siglos y décadas explicando, siglos, he dicho siglos. Siglos, porque hace 100 años ya se conocen las zonas de oferta y demanda, tal y como los está explicando aquí. Pues francamente, mi vídeo te lo explica mucho mejor cuándo utilizar esta zona de oferta, esta zona de demanda o cuándo no usarla. De hecho, mi vídeo te lo explica, pero de lejos mucho mejor. Mucho mejor. Y en menos tiempo. Hostia, tío. A ver, links. WA Application. Vamos a ver cuánto te cobra por el cursito. A ver. Ah, vale, te hace como un test. Vaya examen que te hace, ¿eh? Bueno, voy a poner el de España, que sé cómo empiezan. Obviamente no voy a poner el mío. ¿A alguien le llamarán? Vaya examen que te hacen, ¿eh? A ver dónde te lleva. Ah, en Calendar. Y de aquí te programan una reunión. Pues ya veis, amigos. Al final... Y aquí hay ofertas. Profit BP. ¿Qué es esto de Profit BP? Get your free copy of the Research Traders Profit Train. The Blueprint. ¿Qué es esto? Blueprint. ¿Otra vez la encuesta, tío? Y a ver. Esto es en Trustpilot. Aquí están las opiniones. Disappointing. Best place to be. Oh, la academia está en Trustpilot. ¿Cuántas opiniones tiene? Pues bastante buena, ¿no? Tiene bastante buenas opiniones. A ver qué más tiene por aquí. En descuentos en Alpha Capital del 30%. Esta la utiliza mucha gente, ¿no? Yo no la conozco esta. Ya me diréis qué tal funciona. Bueno, pues nada, un vídeo bien hecho, bien editado, bien subido, con cositas muy básicas, ¿vale? Que para los que se están iniciando, Alpha Capital, sí, mucha gente lo utiliza este. No lo conocía. Para los que se están iniciando, pues está bien. Bueno, pues que sepáis que aquí os venderán el curso, vete a saber cuánto vale y os lo diré. Y aquí no tengo lo que es. Consigue tu copy para los traders. Ah, Profit Taking Blueprint será como alguna especie de señales, ¿no? Yeah, send me the blueprint. Como una especie de señales. Vale. No sabía de qué iba. Bueno, en fin, traders, vídeo por mi parte yo creo que bastante innecesario, como digo, no he aprendido nada nuevo. Ya me acuerdo por qué ya no veía estos vídeos de esta gente, porque para mí son... También el otro, ¿cómo se llama? Que es español, que también lo explicaba. Eran unas flipadas con los ratios 1:100 y todo esto. En fin, francamente, yo esta gente desde el primer día creo que ha sido o sea, el enfoque siempre fue el ratio riesgo-beneficio, que iban como mínimo 1:30, 1:40, 1:50, 1:100, ¿vale? Con esas historias de estructura, oferta y demanda, lead, se han inventado un montón de nombres, point of interest, es decir, han sido bastante famosetes. Yo, francamente, creo que para lo básico que explican, no le veo yo el secreto a su trading, la verdad. No le veo nada, ningún secreto para que digan que ganan $100.000 al mes. Pero bueno, vosotros juzgaréis. Por cierto, amigos, antes de iros, descuentos a las mejores empresas de fondeo. Recordad que tenéis cupones de descuento en las mejores empresas de fondeo. Siempre que queráis comprar una cuenta de fondeo, venid aquí que tengo los mejores cupones. Y, por ejemplo, en Funding Next tenéis devolución del 120% en CFDs y un 5% en futuros, utilizando mi cupón de descuento y, por supuesto, mi enlace. Y además, también con más empresas de fondeo. También os podéis registrar aquí por si queréis, sois usuarios de cuentas de fondeo y cuando salga una oferta tipo de FTMO, Funded Next, los días de Halloween, un Black Friday, pues que sepáis que yo os voy a enviar cuando vienen esas ofertas, lo recibiréis en el correo electrónico por si queréis aprovechar esas ofertas. Así que, traders, para mí ha sido un vídeo bastante innecesario. Último vídeo de la semana. Me he quedado con bastante mal sabor de boca porque no había nada nuevo, no hay chicha y creo que al final el objetivo pues es ese, es venderte el curso, la Pro Firm y la academia online, ¿no? Porque realmente no hay nada que puedas decir, coño, me parece un contenido que sí que me aporta y que he aprendido algo nuevo, pero vamos, que no es nada que no se haya explicado hace 30 años, por ejemplo, ¿vale? Así que, traders, si os ha gustado el vídeo, ya lo sabéis, darle buen like, suscribiros, activar la campanita. Como siempre digo, nos vemos en el próximo vídeo. Chao, chao.